Assalamualaikum and good day to everyone. The main topic that we are going to cover today is on securities market and transaction. There are 6 areas that you need to understand from this topic, which includes the following. This video will cover the first 3 topics, while the other 3 topics will be covered in part 2. Securities market provide avenues for exchanging and creating values of financial assets among buyers and sellers. It provides the opportunity for the investors to trade financial assets in an organized manner. In the securities market, both buyers and sellers were allowed to trade either in debt or equity securities. Securities market are broadly classified as either money market or capital market. Short-term debt securities mature in less than 1 year, normally traded in the money market. Financial assets are also traded according to their maturity period. The short maturity period is a feature of a security that makes money market more liquid. Treasury bills, certificate of deposit, and bank negara notes are among the examples of securities traded in the money market. Normally, institutional investors are the ones who dominated the money market for short-term borrowing and lending purposes. Assets that can mature more than 1 year are traded in the capital market. In this subject, we will devote more of our attention to the capital market. Stocks, bonds, mutual funds, ETFs, and derivatives are among the securities traded in the capital market. Next, there's a primary versus secondary market. A primary market is the market for new issues. In order to obtain financing for operation purposes, firms can issue securities to the public. However, issuance of the firm's share can only be done after all the requirements and regulations of the Securities Commissions and Bursa Malaysia have been fulfilled. If it is the first time the firm is issuing the security, the transaction will occur in the primary market. In the primary market, the issuing firms of equity or debt securities will receive the proceeds of security sales. There are 3 ways that a firm may choose to sell its securities in the primary market. Number 1 is through public offering, in which the firm offers its securities for sale to public investors. Number 2 is a right offering, where firm offers shares to the existing shareholders on a pro rata basis. And finally, is through a private placement, which involves selling securities directly to any selected groups of private investors. Investors can buy securities in the secondary market if they were not being able to buy in the primary market. In the secondary market, shares are acquired from other investors. Investors have to go through a stockbroking firms and will be charged a transaction cost. Hence, subsequent purchase and sale of the shares are being done in the secondary market. In our country, Bursa Malaysia is the securities exchanges that provide the venue for such trading activities, where buyers and sellers of securities are brought together to execute trades. Besides exchanges, over-the-counter market also provide platform for trading in smaller firms and unlisted securities. Issues of shares that have been taken out in the IPO market can change hands among investors in the secondary market. Nonetheless, in a secondary market trade, money does not flow from investor to the issuer as it does in the primary market, but rather money flows from one investor to another from the buying and selling shares activities. Like what I've mentioned earlier for the primary market, one of the well-known market transactions is the initial public offerings or IPO, which marks the first public sale of firm stock and thus converting the firm from private to public ownership. Most firms that decided to go public are small, but yet is a fast-growing company that require additional capital to continue expanding. By going public, it increases the firm's credibility and helps a company raise capital for additional liquidity to invest in their future operations, expansion, and top talent acquisition. When a company decides to go public, it must find an investment bank who's willing to underwrite the offerings. This bank will then act as the lead underwriter and is responsible for promoting the company's stock and facilitating the sale of the company's IPO shares. Normally, the lead underwriter will bring in other investment banks to help underwrite and market the company's stock. The underwriter also assists the company in filing a registration statement with the Securities Commission and to prepare the prospectus. A prospectus is a formal document that provides details about an investment offering to the public. A prospectus is needed when companies make offerings of stocks, bonds, and mutual funds. The purpose of the prospectus is to make investors aware of the risk of an investment. Without this information, they would essentially have to evaluate investment offerings without complete information. Hence, the document can help investors make more informed investment decisions on the investment security. A red herring is a preliminary prospectus which includes the information related to the company's operation and financial status. It doesn't mention the price and number of the shares are to be offered. All the subsequent drafts of the prospectus are also known as the red herring prospectus and is not yet effective until it gets approval for public release. The purpose of the quiet period is to make sure that all potential investors have access to the same information about the company to avoid the possibility of unfair advantage to any unpublished data. Along the registration period and before the IPO date, the investment banks and company executives will promote the company's stock offerings through a series of roadshows to the potential investors, typically the institutional investors. This is the example of the IPO listing process in our local exchanges, which is Bursa Malaysia. And please visit Bursa Malaysia website to learn more information on IPO in our country. You can find IPO summary, listing statistics, and data on IPO performance for the current year as well as for previous years. Now, what information does a final prospectus for an IPO contain? A final prospectus is the final version of the prospectus for a public offering of securities. This document must contain the following details. The most important difference between a final prospectus and a preliminary prospectus is that a preliminary prospectus is not an official offering to sell securities, and the final prospectus is the official offering document and contain the price of the securities being sold. This is the most recent final prospectus from the IPO of Mr. DIY Group Malaysia Berhad that was listed yesterday on the 26th of October 2020 on the main board of Bursa Malaysia with the IPO price of RM1.60. You can get the full prospectus of Mr. DIY Group from the Bursa Malaysia website. Historically, the role of market makers, which are brokers and dealers, are significant in assisting investors to match orders from buyers and sellers in the secondary market. Listed below are among the roles and functions which differentiate between brokers and dealers in the market. However, in today's environment, where most trading occurs electronically, the distinction between brokers and dealer markets has become blurred. In this modern and globalization market, the forces of supply and demand that drive the transaction and determine prices. You can also find the list of participating brokers and dealers in our market from the Bursa Malaysia website. Okay, this is the end of part 1. The next part of chapter 2 will be shared with you later. Thank you and Assalamualaikum.